What's going on, guys? In this video, I'm going to talk about real estate investing for beginners. Passive income, depreciation, tax write-offs, everything you need to know to go out there and start investing into real estate. And what are the long-term benefits, really, of investing in real estate? So stay tuned to the end of the video. So number one, and by the way, we're going to go in no particular order. I just kind of want to go through like 4 to 5 benefits of owning real estate, right? What does that look and feel like? And by the way, why would you own real estate over, let's say, maybe investing in the stock market or investing in a Roth IRA or investing in one of a million other investments? Okay, let's go ahead and get into it. All right, so number one is going to be passive income. Passive income essentially is income that you make while you sleep. This is the income that everybody's talking about. All the millionaires and billionaires on the planet are making passive income, okay, while they sleep. Meaning when you go to bed and you wake up the next morning, you actually made money not doing anything. Well, how can a person do that? Let's just say, for example, you go out and you buy a piece of real estate for $100,000. Depending on where you live, $100,000 may or may not be realistic. Let's say you put 20% down, which would be $20,000. You get an $80,000 loan on the property, right? So this right here is what you would call a loan. $20,000 down, you have an $80,000 loan, but you own a $100,000 property, and you only spent $20,000 to own the $100,000 property. You're gonna move tenants in here, right? You're gonna move a big happy family right into this piece of real estate, right? They're gonna rent that deal from you every single month, month after month. Now let's just assume, for easy figuring, that these tenants rented the property out for $1,000 a month. Now, obviously, you have insurance and you have, principal and you have taxes and stuff like that. But let's just assume your take-home was even half of that, okay? And again, it's gonna vary depending on the deal, depending on where you live, etc. Right? But let's say you made $500 a month passive income from owning this $100,000 piece of real estate, right? But again, you only put $20,000 down, right? So now you can take this $500 a month, and you can apply it to this loan, right? So over time, you're actually paying down the mortgage. So again, over time, you're paying down this loan, right? Which is actually gonna bring us into our next part, which we're gonna talk about right here. It's actually kind of a 2-part thing that I wanna talk to you guys about really quick. That over time, I'm gonna draw a graph for you guys if you don't mind, okay? So right here, you have your house, right? And you have your loan. And in the beginning, your house and your loan are essentially at the same place, right? So, but over time, what happens? That starts to happen. And what do I mean by that? Right? Well, take a look here. This is actually appreciation. That's appreciation because over time, the value of the property is actually going up, right? So this is number 2. That's the second benefit of owning real estate, okay? All right, so, and number 3 is gonna be equity, right? Or paying down your mortgage, okay? So we'll just put it up here as equity, okay? But really, what's in between is equity. So this is actually you paying down your mortgage, and all of this right here, right, becomes equity. Okay, so you're paying down your mortgage over time, your loan, right? Your house is going up over time, it's appreciating. By the way, in America, the average appreciation rate is about 5%, okay, depends on where you live. So let's just say over time, you have a $100,000 house, okay? Year 0 is $100,000, right? Year 1, again, for easy figuring, would be $105,000. Year 2 is gonna be $110,000. Can you guys see what would start to happen over time? Over time, appreciation, imagine after 10 years, right? Pretty insane, okay? And over time, by the way, your tenants are paying down your loan. So now all of a sudden you have all this equity because eventually your loan's completely paid off, you own the property free and clear, your house appreciated after 10 or 15 or 20 years, and now you own this house outright, and maybe now it's worth, $150,000, okay? So you bought a house for $20,000, watch this. You paid $20,000. Remember, that's what you put down, okay? That's what you put down. I erased that a minute ago. You paid $20,000, and now your property's worth $150,000. What did you make on this deal? You made $130,000 on this deal, okay? Now again, I know that there's a lot of zeros, and in the real estate world, it's never all zeros. I understand that. Okay, appreciation might be 3% or 4%. It might take longer than that to pay off your loan. It could happen sooner, by the way, and your appreciation could be more than 5%. Look, it's all going to be subjective depending on where you live. If this is a multifamily, if it's a single family, you have to take into account for vacancies, right? You're not probably always going to have a tenant in here, 100% of the time, but it's not going to be 0% of the time either. Okay, if you buy a good property, you're going to rent it out in a good area, right? So even if your vacancy was 10% or something like that, and you were at a 90% occupancy rate, okay, and your house appreciated at a different variable than this, you're still gonna end up with some number that's much, much, much greater than the number that you actually put down on the property, okay? So this is the second and third benefit of owning real estate. Let's get into number 4. All right, number 4 is tax write-offs, okay? The benefits of being able to write things off on your taxes, okay? A lot of other investments, you're not gonna have this, okay? So number 1, you have your interest on your mortgage, right? This is a tax write-off, okay? You have your insurance, tax write-off, right? Repairs, any maintenance repairs, anything that you have to do on the property is a tax write-off. Let's say maybe you get credit cards, okay? Credit cards to buy things for the property, okay? It's a tax write-off, okay? Another big one, by the way, is something that I like to call depreciation. If you're not familiar with what depreciation is, I'm gonna write it up right here, okay? Depreciation. The government and the IRS actually allows you to depreciate a rental property, okay, over time. So, you know, a lot of people aren't talking about this, right? But you can actually depreciate a rental property 27.5 years, excuse my handwriting, 27.5 years of depreciation, right? Okay, on a rental property. So let's just say that same property at $100,000 divided by 27.5 is $3,000, okay, I'm gonna do it right here. $3,636 a year of tax write-offs. Okay, that's a tax savings, literally, that goes right to your accountant. Okay, you're gonna write this off, right? Tax write-off, $3,636 on top of everything else that we just talked about a minute ago, right? So this is huge, guys. If you're not investing in real estate, then I don't know what you're doing. And by the way, there's a lot more, okay? Another one that we could talk about here really quick is 1031 exchange. What's a 1031 exchange, right? A 1031 exchange, I mean, put simply, is where the IRS or the government allows an investor, okay, a real estate investor, to defer capital gains tax when they sell a property if they buy another property that's basically what they would say like the other property, okay? So if you have this house right here and you're like, you don't want it anymore, okay? And you sell this house for $100,000, in another normal investment like a stock or a bond or maybe cryptocurrency or something like that, you would pay capital gains tax on profit. You're always gonna pay capital gains tax. The IRS wants their money. Okay, but what you can do in real estate is you can say, well, I don't want to pay the IRS. I'm not gonna pay the IRS. And you can just go buy another property that's just like this one, and you can defer paying this, right? You just take this money and you go right over here, or maybe more. It might be a little bit more or a little bit less money, as long as it's similar to this other property, then you actually are not gonna pay any capital gains tax. Again, to put it very simply, okay, so understand that is a simple form. Okay, and the 5th benefit that I would say of owning real estate is that it's a numbers game. There's a lot of ways to interpret what I'm saying here. You can go and just kind of make offers on a bunch of properties and eventually get one. It could also mean that you just buy a bunch of properties, okay? So maybe you're buying multifamily, maybe you're buying single family. I don't know what you're buying, okay? Excuse my houses. I'm not necessarily an artist. But let's say you buy 5 properties, okay? And now you have 5 properties, you buy them all for $100,000 each. You put $20,000 down on each property, right? So 20K, 20, 20, 20, and 20, right? What are you all in here for? You're all in for $100,000, right? So for $100,000, you own $500,000 worth of real estate. So for $100,000 out of your pocket, you own $500,000 worth of real estate. Now, again, we could get into other benefits of owning real estate. You know, eventually you could probably refinance. Okay, there's a lot of things you could do. I probably wouldn't, but it would just depend on the situation, right? But now you have not one tenant, but you have 5 tenants, or 10, or 20, or 30 tenants, right, paying you every single month. So that thing we talked about a little while ago where I was saying vacancy, and we were talking about things like that, you know, anytime you do more, right, you do the numbers game and you own a lot of properties, not only are you, number 1, gonna create more wealth, right, but number 2, basically over a long enough period of time, the numbers are gonna be lower, right? It's a numbers game. So, you know, your vacancy rate is gonna be lower. Vacancy is gonna be lower the more properties you own, right? Because what's the likelihood of 20 properties of all your tenants moving out the same freaking day? Okay, unless you own one apartment building and the whole damn thing catches on fire, okay? But then you own 20 apartment buildings, right? So your vacancy is gonna be lower over the long term, right? And there's gonna be more wealth created. So these are some benefits of owning real estate. They don't know how to get started. They don't understand how to get started in real estate. And by the way, if you don't have 20 grand, there's all kinds of loans out there where you can get loans cheaper than that. There's things where you can buy duplexes. You can buy like a duplex or a triplex or a quadplex, I believe. Okay, check with somebody first, an attorney or somebody like that. And I'm not a financial advisor, but and you can move into one of the units, you can rent the other ones out. They'll let you, basically, I think you can put less money down. There's also things out there like FHA loans, okay? You can get an FHA loan. I think FHA right now, and again, don't quote me on this, but I think it's like 3.5%, okay? 3.5% down. This number might be a little bit different, okay? Again, it just depends on a couple of different variables, but guys, there's a lot of ways to get into real estate, right? So if you're watching this video, understand that you can do this, okay? Anybody can do it. I can do it, you can do it, and anybody watching can do it. Another thing you can do is you can get into the wholesale game. If you're not familiar with what the wholesale game is, I'll put a link in the description down below or up here in the top corner, but you can wholesale real estate and essentially you can make your 100 grand right here, right? And then you can put it all up into owning long-term real estate, okay? Guys, I hope you enjoyed this video. These are a couple of the benefits of owning real estate long-term, right? You can create actual wealth, generational wealth, indestructible wealth, and I hope you go out there and you do it for yourself, your family, your future family, and your future kids. Hope you enjoyed the video. Drop in the comment section down below what you liked. I look forward to seeing you in the next one.